So she didn't inherit Grandpa's jawline, but there's no doubt she's family. It's your job to raise her, and it can be tough. Let's make it easier. With technology and automation, you can do more, like produce high-quality bales with way less effort. Built-in sensors can measure bale moisture and size, so you can monitor quality on the go and manage your fleet from your phone. Sit back and enjoy effortless operation. Discover an easier way to work.
Welcome back once again here to Market Talk. I'm Susan Littlefield, sitting in for Jesse Allen, and of course, we're being powered by the folks at John Deere. It's been an interesting market trade once again on a Tuesday where we saw a little bit of influence coming back. But my question is, are we seeing a little bit of a chasing of the headlines a little bit that might be adding to what is happening in this trade? And that's where I want to start as Jim McCormick joins us. Jim, of course, is with agmarket.net. And you and I had this great conversation before we even started today's program. And the politics of grains seems to be blending together. And there's a lot of, I don't want to call them headline chasers, but it seems like whatever is said across those headlines are definitely catching the corn and beans attention.
There's no doubt about it, Susan. We are chasing headlines right now. I mean, the story, of course, in the big picture is going to be supply. Where does this crop end up as harvest just beginning? Early yields, I've heard in general, are good. There is a belief that the corn crop maybe is a little bit smaller than what the government was thinking in August. We're in that same camp. Maybe the early bean yields are a little bit better than what people are thinking, but the anticipation is this dry August is going to have a negative effect as we get into later crops. But right now, we're still in that very infantile stages of harvest. So we're really waiting for those numbers to come from the actual the combines. So the market is looking for something to talk about, something to trade. And what they're doing is they're trading these headlines coming out of South America as well as coming out of China.
So let's talk about China and all the factors that are weighing in. I'd read earlier today, there's some Midwest politicians that are putting on a little bit extra pressure maybe on China, wanting to get some negotiation conversation going. What are you hearing in that regard? And is it going to help?
Well, we'll see. I mean, there's no doubt about it, folks. We've seen a lot of hype throughout the summer. We're very, very close to a deal. President Trump went to Iowa 4th of July weekend. Everyone was disappointed. You heard a lot of rhetoric coming out of Labor Day weekend. Maybe something was going to be announced. It did not happen. And then this past weekend, remember going in on Friday, President Trump and Xi had that big phone call conversation, and there was hope that maybe agriculture would be brought up. And obviously it wasn't. It was all about TikTok, and the market reacted a little bit negatively on Monday. Well, today, there's another group of officials meeting with some Chinese officials out of the Midwest talking about trade again. I think it was Mr. Perdue, one of the administration officials, is talking about maybe a closer deal, unfortunately, with Boeing and not with beans. But there's this hope that eventually we are going to get this deal with China, because for the most part, China has essentially ignored the U.S. bean market this fall. And each day they miss a sale, we don't sell them a bean is a missed opportunity. The fact of the matter is, Susan, we missed the September window. Brazil took it. We missed the October window. Brazil took it. Now, another dynamic that happened yesterday is Argentina, out of nowhere, is finding it actually a pretty severe fiscal crisis. Their peso absolutely collapsed until Secretary Bassett said that maybe the U.S. would be in there to maybe help bail them out. But what happened is they're in a fiscal crisis. So what did their president do? They dropped their export taxes on all ag goods, which in essence dropped the price of beans in Argentina by $3 instantaneously, and it dropped the price of corn by 50 cents instantaneously. So what happened? China came in and swooped in and bought a minimum of 10 cargoes of beans, I've heard, to as much as 15 cargoes of beans, which people are now saying that means China's got its November needs covered at least 50%, maybe as much as 70%. So we're missing that window. So it's very critical that we get these deals done. But right now, I'm very leery that a deal is going to be done soon enough. And the fact is, if we miss this window in November, you're talking about a missed sale opportunity of between 5 and 600 million bushels of beans that it's going to be hard to recoup anytime soon.
That was going to be my next question. I do want to rewind and go back to Argentina here in a second, but we've got these beans that are going to start coming out of the field here pretty quick. What is our marketing plan thought if we don't have a plan in place or something for China?
Well, I mean, it's a huge problem. I mean, if you're a listener up in the Dakotas right now, you know it's not a problem. It's a catastrophe. You can't even get if you can get bids. I got an 8 handle in front of it, and that's if you can get a bid. So now you got a situation where you got people scrambling for storage. They were going to store corn, move the beans. They can't move the beans. It's going to force them to store the corn. But that's a situation that could potentially trickle all the way into the Midwest, because we ship a lot of beans in the fall down the rivers out the Gulf. It's the same problem, Susan. If you're not shipping beans off the Illinois River, then all of a sudden, guys that are normally pushing beans out this fall are going to get stuck holding to the beans because the elevators don't want them. And then that's going to hurt you in the cash market potentially, because essentially the domestic processors no longer have to compete against the Gulf for the beans. And it essentially potentially depresses the market. And the other problem we've got is potentially if you delay this long enough, we miss that window to ship goods during the wintertime because the rivers freeze up. And potentially, as you get into the springtime, that traditionally is not when we sell beans to the world. We ship corn to the world in the springtime because Brazil traditionally takes that mantra up in late January and runs into early summer. And that becomes a problem of logistics for us potentially.
This is what nightmares are made of as you try to figure out how you're going to market.
It is. And the hard thing about this is it could change on a dime. I mean, I like to tell people, a lot of our grain traders are listening, do not trade copper. But the copper market, President Trump earlier this fall, out of the blue, he said, I'm going to tariff copper. The price of copper in one contract rallied about $40,000 in about an hour. About 3 weeks later, because of the pressure from the housing market, President Trump reversed course. And the price of copper dropped $45,000 in less than a minute, just on a change of dynamics. That could happen in the bean market. If we get a headline coming out tomorrow, folks, that says, hey, so-and-so, China committed to buy X amount of beans, it will have a dramatic change in the marketing. So it's just, we're in a very tough window right now that without China, you could see prices be depressed. But the dynamics change, and they can change on the moment of a tweet. It changes the whole dynamics to the bullish side potentially.
And there's always the potential for some countries that we haven't had trade partnering opportunities, though, maybe to step in. I mean, they're not going to buy in as mass amounts, though.
We are going to lose some. Like I said, I fear the China business, we could lose 500-600 million bushels worth of demand, potentially up to 800-900 if China manages to essentially ignore us all year. But we will gain some business, folks. We won't get it all back because essentially if Brazil and Argentina are essentially taking the heavy load of essentially filling our normal demand, our normal supply, those traditional buyers that maybe normally go to Brazil are going to have to find a different supplier. So we will see some of those purchases, and maybe some countries will pop up on the wire that you normally don't think about buying.
Do you think, as you look at the grain market as a whole, are we going to see more harvest pressure this year compared to previous because of the geopolitical scene we're in right now?
Well, I think it's going to get a little bit, maybe some of the pressure that we normally expect, maybe we're not going to see. Like I said, the question is right now, if you're a producer, are you going to store beans? If there's no trains moving beans in North Dakota, are you going to store the beans or are you going to store the corn? You run out of room. The other thing, honestly, Susan, that we're debating is a potential Trump dollar bailout, for the lack of a better word. There's a lot of talk out of Washington that there is going to be money coming into the countryside to help stabilize the rural America. Okay. So the question then becomes, is a producer going to move grain this fall, or is he going to wait and see if he gets the money? Because theoretically, if he dumps a bunch of grain in the fall and he gets a bunch of money from the administration that falls in this calendar year, it affects his tax situation at the end of the year. But to add to the complexity of all this, I don't know where we're at. By the time we get done recording this could change. But right now, I would argue as a recording, this government is going to shut down. President Trump pretty much told the Democrats there's no use coming to negotiate. The Democrats seem to say like, hey, they are the minority. This is the best way they can try to get their policies across, is they're going to try to force the Trump administration and the Republicans to negotiate. And if they can't get anywhere, and right now I believe the Senate's actually on recess, so the odds are they're not going to get anywhere. This government's going to shut down. And that just complicates everything potentially, because potentially we won't get any October WASDE numbers potentially. You won't get weekly that flash sale that you're waiting for. Did someone buy? Who bought the corn? Is someone buying corn? Is Mexico buying corn? You're not going to know any of that if the government shuts down. So it is going to make it even more challenging into the fall, unfortunately.
You just brought in a whole bunch of layers, I think, that a lot haven't thought about, knowing that that September 30th deadline is coming. The House has said we're not coming back till October, extending their recess. It just seems like we've got some butting of heads going on. And in the end, rural America is one that's going to get hurt.
It's going to get hurt. I mean, and it's going to hurt for everybody. I mean, if you're part of the, it is going to become a crisis for a lot of people. And unfortunately for me, I'd said it's just my humble opinion. I think it's going to happen. And, last go around, I think was 2019. Don't hold me on that date, but it was late in that last Trump administration. I think we were shut down for 4 or 5 weeks. And, we didn't get CFTC reports, and it's, you're flying a little bit blind. So, let's hope they can get a deal done. But, I think I saw one of those betting parlors said 70-80% chance of a government shutdown. So the bettors are saying this is going to happen, unfortunately, folks.
Want to take a few minutes, if you can kind of break down a little bit more about this Argentine's grain export tax. You alluded a little bit earlier in our conversation, but really talk about more about how this all came about and why it came about at this time right now.
Well, what really happened was about a month ago, you had Argentinian elections, okay? And the president of Argentina that was elected a few years back, he put in some very hardcore cutting government spending, cutting social programs, and really tried to revamp the Argentina government and the way they do traditional business, okay? And he gets a very popular response. Well, in the latest round of elections, his party lost a lot of votes, which really undermined the currency, because people are a little bit worried about his policies, and the currency essentially collapsed. They have a revenue shortfall, Susan, plain and simple. They need American dollars. So when they sell their product onto the world market, they sell it in American dollars, and then they convert those dollars back into pesos. So he's panicking a little bit. And what he's essentially said is, I'm going to give you, essentially, you can sell all this product at no taxes till the end of October, or $7 billion, whichever comes first. And I'm going to bet if they don't get $7 billion by October 31st, it's going to extend out, because the fact of the matter is they need money. And the Trump administration came out yesterday and said they were willing to look at ways to kind of backstop their economy, fearful that their economy could even crater even more potentially. So it's a situation that is very tenuous at best. And unfortunately, it's hurt the American farmer right now, because like I said, traditionally, Argentina tends not to sell bulk beans. They tend to sell meal and oil. But because of this, essentially, I'd call it fire sale, China swooped in and bought a whole boatload of beans from them.
And it doesn't come as a surprise. I mean, they get them like they could that cheap.
Yeah, like I said, I think the estimate was essentially the price of beans dropped $3. So, like I said, it went on fire sale, and the world jumped in.
So harvest does continue. And have you heard any early numbers? Because I know the I states were talking about a lot of disease concerns, and that was changing their yield estimates.
Right now, the yields are down. I would say I would argue the August crop number is way too high. I think the debate, Susan, is how low. I think if you're looking at a number, trying to pin a number down, what the trade's thinking, I think you're probably looking at a low end, maybe 180, and maybe the high end around 184, I think is where we're at this point in time. The I states are definitely getting beat up on disease. There's no doubt about it. But it's not that easy. And what I mean by that is we've seen some yields in Iowa that were 300 bushel corn yield if you double sprayed fungicide. If you only did one fungicide, your yields drug 50 bushels to 200. If you did no fungicide, your yield fell below 200. So now we're trying to figure out, we know there's a bunch of disease pressure. Now we're trying to figure out, did the farmer spray at all? Did he spray one spray, or did he did two sprays? So, there's just a lot of uncertainty. But I think the calculus is this crop's going to get a little bit smaller. But and I know the argument is, we rallied 35 cents off the fall low, but if it's getting smaller, why aren't we going ballistic? Well, the problem is the feed number still looks incredibly overstated. And that has to do with jumping to the cattle. That has to do with the fact that there's no cattle coming across the border. And with that screwworm found 70 miles away from the U.S. border, I'm going to argue that border, looking out of the back months straight into the feeders, this market is convinced we're not going to open that border for a very, very long time. And that would argue that feed number, which is raised 425 million year on year, is way too high. So if you drop the supply of corn by 5 bushels, let's go from 188 to 183. If you left feed unchanged year on year, they'd pretty much offset each other, and you'd still be looking around a 2 billion carryout. That is why, even though these yields are a little bit questioned, the corn market's not going ballistic.
So could that be part of the reason why we're seeing the uptick in corn exports into Mexico? Because they need the grain to feed the cattle that can't go across the border?
That is 100% what's going on right now. They are feeding those cattle and they're slaughtering those cattle. Now, what's interesting in Mexico, they don't feed the cattle to as much heavy weight as we do traditionally. Excuse me. It's more about a volume and a quality. But yes, that is why we're doing it. And this is what gets interesting, I think, personally, next week. We have a big stocks report number. It's traditionally the final yield from last year's crop, or the final ending stocks of last year's crop. What's going to be interesting, if you look from January on all last year, they lowered the feed usage by 100 million, but they raised exports by 325 million. A lot of that was attributed to the Mexican buying all these additional corn. So I'm a little bit worried that that feed number that they've been using all this past year is a little bit too high, and we could get a bearish surprise on that number. We'll see. A lot of it has to do with just what amount of cattle were we feeding all this past year and what we're going to feed this upcoming year.
And what a crazy ride we had in the Monday trade. And even today, continue to see some strong support going on in the cattle.
Yeah, I mean, the cattle, like I said, it responded because of the screwworm. The cattle feed number confirmed, the cattle supply is going to be very tight. Right now, the cattle market's goal at this point in time is to essentially get prices high enough to essentially either bring demand in, limit demand, or bring supply in. And Susan, that brings into the topic we were talking about. There's talk out there that maybe the government's going to essentially try to encourage the producer to start retaining heifers, or maybe open up U.S. grazing ground for grazing. Maybe there's talk of them giving money to retain livestock, which I think gets very, very complicated. But because essentially it's a situation that part of the problem people are upset in America is the high price of food. But unfortunately, to dig out of this problem domestically, you're going to have to take more pain for multiple years to essentially build back that supply. And it's going to be interesting how the politics play out on it.
Well, and you made a statement to me before we even started today's market talk, Jim, was this took years to get to this market where we're at today. It's not going to revert back tomorrow.
It's not. I mean, if you look at what drove it, a lot of it was multiple years of drought in the plains, plain and simple. And, we just contracted that herd. The other problem we've got is just that we've got to be very honest. Agriculture, unfortunately, is driven by a lot of older generational men. And a lot of the younger generation doesn't want to feed cattle. It is a hard game. A lot of people are very leery getting into it because it feels like we are at the top of the cycle. I don't know if that cycle ends today, if it ends a year from now, but it feels like we're in at the top of the cycle. And that's part of the problem we've got, is the older generation saying, I don't want to wait for 2 or 3 years to get paid off. And maybe I don't get paid off. Who knows how the economy is going to be in 3 years? I'd rather take the money today for these high price, for the high price of beef. So it's a dynamic situation. I know the Trump administration is going to try to smooth it out, but I would argue it's not it's whom you're going to honk off. Because if you start retaining heifers, you're going to drive the beef prices up. If you start opening up the borders, part of the problem is we're tariffing all that Brazilian beef coming in. Let's say you drop that down to zero. You drop all these tariffs down to zero for bringing beef in. That will be happy for the American consumer, but it's going to cause a lot of problems for the American beef producer and the livestock producer. So there's just no easy answers, unfortunately. And whatever answers we get, I think it's going to take multiple years to clear up the problem.
And all summer long, we kept hearing that, consumers are going to pull back this week. They're going to say no, to higher beef prices. But really, we continue to see, for the most part, that beef moving off the shelf pretty quick.
We have seen it, although economic history would tell you, Susan, it's not if, it is a matter of when. Like I said, I'd be first to admit the consumer hung in there a lot longer than I thought he did. But if you look at these jobless numbers the last couple of months, they are a very, very crucial problem. And they are the canary in the coal mine. And it's a situation, I think it's much more serious than some people give it credit, because the Fed for the last, 2 years, 3 years, we've been fighting higher food price. They want the interest, they want inflation at 2%. It's running closer to 3. They're essentially giving up that mandate as a way to essentially start cutting interest rates to, in essence, stabilize the job market. Well, when you start lowering interest rates, what are you doing? You're stimulating even more demand. Right now, I would argue the money supply, the M2 money supply, is at all-time highs. We're bringing in record tariffs, but we're also bringing record deficit spending. It's not sustainable. And eventually, you're going to get to the point where the cost of goods get high enough that the consumer backs off. Like I said, the beef price, the goal right now is to drive prices high enough for the consumer to say, enough's enough. I can't afford it.
All right. What about the hogs? We have not seen a lot of headline chatter about them.
Not a lot about the hogs. I would argue the hogs are just kind of riding the coattails of the beef. The fact of the matter is we are seeing some people get forced to, a lower cost of source of protein. And the hogs and chicken are that next source. And I think that's supportive. If you would see the beef market start to top, I think eventually it would have a negative drag on the hog market, but not as quick, because like I said, the hogs are the fowler, being a little bit least cost, at least a less cost than the beef on the grocery store equation.
Well, Jim, thanks for sharing your wealth of knowledge. It's been a crazy already 2 days in this trading week, and appreciate your thoughts.
Thanks for having me on.
It's been Jim McCormick joining us for this edition of Market Talk, being powered by John Deere.